Ever wondered how interest rates can shape the landscape of the housing market? Well, it's a tale as old as time, or at least as old as the modern economy. Interest rates, those pesky percentages that determine how much extra you pay on your loans, can either be a homebuyer's best friend or worst nightmare. For starters, interest rates are a fundamental part of our economy, acting as its heartbeat, if you will. They're set by our central bank, and they determine the cost of borrowing money. When interest rates are low, borrowing money becomes cheaper, and when they're high, it becomes more expensive. Now, imagine you're shopping for a home. You find the perfect house, it's got everything you want, and the price is just right. But then the interest rates start to rise. Suddenly, that dream house is starting to look a little less dreamy, because when interest rates rise, the cost of your mortgage rises too. On the flip side, when interest rates are low, homes become more affordable. More people can afford to borrow money to buy a home, which can lead to an increase in demand for houses. And as we know from basic economics, when demand goes up, so do prices. So in a low interest rate environment, you might see house prices rise, but it's not just buyers who are affected by interest rates. Sellers too feel the pinch. When interest rates are high, fewer people can afford to borrow money to buy a house, which means less demand. And with less demand, sellers might have to lower their prices to attract buyers. So to sum up, interest rates have a significant impact on the housing market. When rates are low, borrowing is cheap. Demand for houses can increase, and so can house prices. But when rates are high, borrowing becomes expensive, demand can decrease, and house prices might fall. That's the dance of interest rates in the housing market. It's a delicate balance, a seesaw of supply and demand, prices and affordability. And as we step into the spring of 2024, this dance continues, shaping the housing market in Hudson Valley and Orange County, New York. So, whether you're a buyer, a seller, or just an interested observer, keep an eye on those interest rates. They might just be the key to understanding the housing market.